Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, we're going to go through the Forex market outlook. And before we dive into a few charts of interest, I just wanted to cover a little bit of the May seasonals. I know we've only got a week left of April, so I wanted to just talk about the May seasonality in this video, just because there is a huge turn between April and May when it comes to the US dollar. We can see here on the seasonal heat map that the US dollar index usually underperforms. It's the worst performing month according to this seasonal heat map, that April is usually typically bad, which we have seen through this month already. However, May is typically the best performing month for the US dollar, and this coincides with the downside in the Australian dollar and the pound, as well as the likes of the euro and the New Zealand dollar. So I'm going to look at a few of these charts going into today, because we're starting to see some potential weakness forming on a couple of these pairs, especially sort of the pound US dollar. I don't think the dollar move's completely done with just yet. However, I do feel that we need to start looking at those key support and resistance levels in case we do start to see this May seasonal period occur. Now, if I just bring in now, let's just take this off the screen and let's go and bring in the strength and weakness chart for this week. We always like to look at the strength and weaknesses of the currencies, and if I actually just zoom in a little bit, we can see that the pound still remains relatively weak. Although it hasn't moved much from last week, we're still in sort of a -4 area, so I still want to be more on the short side of the pound. The biggest loser of last week was actually the Canadian dollar, and that's quite surprising considering that the Bank of Canada actually came out and was quite had quite a hawkish tone about the economy in Canada, and we saw a bit of a weakness there. The best performing currency of last week was the yen. So again, starting to see maybe a little bit of the fact that these safe haven currencies like the dollar, the Swiss franc and the yen are starting to gain a little bit more over the sort of risk currencies. So that's interesting to see. So let's just dive into a few charts then, because what we're going to be looking at is the daily chart time frames. We're going to be identifying where prices may go before we see some further downside. So I'm going to start first of all actually at euro US dollar. Again, we were looking to sort of buy euro US dollar last week, and we were looking especially down into sort of this level to be a buyer of, and we didn't quite get the pullback that we're anticipating. However, if we are going to start seeing a sell-off in the sort of start of May, we want to identify key areas where price could go. And for me, looking at this chart at the moment, the sort of supply zone would be resting all the way up here. Now, if I actually just expand this out, let me just put a level on where this supply zone sort of starts, and it's around about 121.55. so what I'm going to be looking for going into this week is probably some further long opportunities in the short term. However, if price does come back up into this area here, I think we need to start considering that there could be a reversal to this move, and we could start seeing some downside to euro US dollar if price hits that 121.55 level. We know that this is a supply zone because the strong selling after price came and retested this area of prices, we had a huge sell-off after. So we know this is a really nice supply zone to the market. Moving on to the pound versus the US dollar, then we can see that price already had a bit of a sell-off last week. It started off very strongly for the pound. However, we have seen that slip recently. Now, the pound is pretty much buoyed by the vaccines that are going on over here and the vaccine reports that we have vaccinated so many people in the UK that the likelihood of a third wave due to the coronavirus is more and more less likely to happen, which means that we could probably get back to sort of full sort of working economy sooner than other parts of the world, for instance. So what this is suggesting here is, you know, that we've had quite a strong pound for a while. However, we have really struggled to break above this 1.4 level, and I think this is where we're going to see a little bit of just a top in the market. I wouldn't be surprised to see price coming back up into this area here in order to get short again. So what I'll be watching for on the pound is another sort of move up into 1.4. We may only get back into sort of the 1.39 areas, but to me 1.4 looks a pretty good area. If price was to sort of if I just redraw this, if price was to sort of double top here, that would be ideal to look for shorting opportunities on pound towards the end of this month. So maybe seeing a little bit more upside, maybe a little bit more dollar weakness until we see price hitting towards that 1.4 level. Moving on to Aussie then. So we spoke about Aussie in the Forex market wrap, and what we really liked on Aussie was the fact that the price was potentially forming this head and shoulders pattern where we could see price break to the downside and head towards this sort of block of candlesticks over here. So really like the potential for this to happen on Aussie. What I would want to see now is a nice bearish weekly candlestick forming, and at the moment price is kind of capped between this sort of range, starting between sort of 0.77520. So if I just put a mark on here, 0.7751 or 52, and down at the lows here at 0.77. So the market is just kind of capped between this area. Now, if we are going to see that reversal in Aussie strength and dollar weakness, then I would expect the market to break to the downside. And if it was to break out of this consolidation, I'd expect to retest around about that 0.77 for some downside. Okay, now, just because that's the case doesn't mean that that's going to happen. Price could also break to the upside. So the next sort of supply zone to sort of worry about is all the way back up here at 0.7910. The reason why I always look at these bullish candlesticks here is because this is the last sort of buying activity, and then we saw a huge sell-off in the market. So arguably, if price, instead of breaking lower like we were suggesting here, if price breaks to the upside, then we could see the market continue to rally up until 7.910 for a reversal at that point, because there's obviously been a huge supply zone up in here where we've seen an acceleration of selling coming in from this area. So if price was to get back up to that point, I'd expect sellers to also re-enter the market again. So keep an eye on Aussie. This one's quite far away from this supply zone though, but I think this is what we could potentially see if price was to break the highs instead of breaking down to the lows. Moving on to Kiwi then. Kiwi, another one which I quite like for further downside as well in terms of overall. However, again, the supply zone for me is resting all the way up here. This area in particular would be the sort of higher time frame zone, and we spoke about this on a previous video. However, you know, this area was the sort of, this is the last bullish candlestick before we had this severe reversal there. So between 73334 and 7432, this would be an area I'd expect prices to potentially fall from. We also looked at the potential for price to bounce off of this supply zone as well, this sort of slightly shorter time frame supply zone. If I just pop in the numbers here, it's around about this area, around about 7 to sort of 50. And 7240 or 7238. So a couple of options I'd like to see happening forming on New Zealand US dollar. We're either going to get the rally up into this level here at 7250, and we're going to see a rejection of that, or price could break a little bit higher and maybe react from the daily time frame supply zone. So two supply zones there to really keep note of in order to look at potential opportunities. Finally, I'm going to move on dollar CAD. Now, dollar CAD's not really on the sort of seasonal mix, but I still feel like there's an opportunity to be a buyer of dollar CAD if we can get back down into this demand zone. So the demand zone starts around about 1.2403 and finishes around about 1.24 8.238. Now this area here is just going to be a nice area to look for buyers to step back in again. Why is this an area there we could see buyers come back in? Well, it was the sort of aggressive turnaround down here where we saw significant buyers coming in and taking out all these highs through there. So that to me is a significant area. If price can come back down in and around this zone, I think we'll see buyers stepping back into the market. So for me, this is one to watch through May. I think this is a good opportunity to be a buyer of the market. So keep an eye on dollar CAD as well. I hope you enjoyed this video update, and I'll speak to you soon.